They promised us a green January. They promised us that if the first 5 days of January are going to be green, everything's going to be okay. Actually, they were green. But then came the unemployment report. Then came the employment report. Then came NVIDIA, and everything tumbled and crashed. Let's summarize the week, and let's see what happened in the stock market. Because if you look at your portfolio, it wasn't a green week. So hello everyone and welcome back to the channel. If you're new, my name is Micha, and on this channel, we talk about stocks, but we don't provide financial advice. Everything and anything that you see is of course not financial advice. It's only for entertainment and educational purpose only. And it would be amazing if you can subscribe to the channel and turn notifications on. And by that, you'll, of course, be notified every week when a new video is up. If you haven't had a chance to look at the summary of 2024, this would be a good opportunity after this video, of course, to go back and look at 2024, how we ended the market. Let's dive in directly to the major averages. And unfortunately, I do not have very good news. We had a 4-day week with Thursday down because of Jimmy Carter's funeral. But the market really did not perform as expected. As you can see, the RSP, the equal weighted S&P 500 was down 1.7%, the Dow Jones down 1.8%, the S&P down almost 2%, and the Nasdaq down 2.2%. This brings the Russell down 3.3%. Why did all of this happen? Well, it happened from two different reasons, and we're going to talk about them. But now let's talk about one of the reasons. US 10-year yield is going up like crazy. We are now back, sit tight and see this crazy thing, to the higher than the rate that we had before the Fed started reducing rates. This is the Fed reducing rates coming down. And this is where we are today, back to square one. Basically, back to 100 basis points higher than we're supposed to be. How does that make sense? We're going to talk about that in a second when we talk about the news. When we look at the indices themselves, you can see energy coming in at 1.5%. The XLV, which is the healthcare, up 0.45. But on the flip side, you can see both the technology and communication down between 4 to 3%. Real estate down 2.7%, and consumer discretionary down 2.6%. Will the crypto market provide us safe haven? No. Bitcoin down 6.8%, Ethereum down 10%. How is it related to the 10-year? Well, it's not really, but when everyone sells everything that they have, everything gets hurt. When it rains, everyone gets wet. I think that's the saying. Or if not, maybe we'll just invent that kind of saying. When we look at commodities, you can see the crude oil up 4%, natural gas up 8%, and even gold and silver up for the week. People are afraid. When gold and silver are up, you can see that there is a lot of fear in the eyes of the investors. And when you look at the Magnificent Seven, this week they were not magnificent at all. NVIDIA had an amazing week with a very bad stock performance. We're going to talk about that. Tesla down 4%, Amazon down 3.8%, and we ended the week with a fear and greed gauge, CNN fear and greed gauge, on the cusp of being at extreme fear. And you probably feel that. If you don't want to buy any stock, if you're like, sell everything, move me to bonds, I don't want to see stocks anymore, you're exactly at a point where fear and extreme fear become dominant in your psychology. Remember that usually, and again, this is not financial advice, but the history shows that these are the better areas to buy stocks in the long run. In the short run, maybe you will still see some kind of correction or a bear market or anything related to that. But usually when you buy in a fear and extreme fear, usually that's a good timing mechanism if you're trying to time the market. That brings us directly to the news of the week, and we will start with Friday. Friday, 8:30 a.m. Eastern, we get the employment report. Employment comes hotter than expected. Hotter for the economy is good. We have a rise in payrolls. Instead of 160,000, 256,000. Instead of unemployment of 4.2%, we get an unemployment of 4.1%. Up to now, sounds good. What's the problem? Well, you remember the Fed? The Fed has two mandates: having the labor market intact and inflation. If the labor market is too hot, like this report might suggest, then people are willing to pay everything. If they're willing to pay any price for anything that they buy, that creates inflation. During the week, we got the Fed minutes. What are the Fed presidents worried about? Inflation, impacted by Trump policies, the tariffs. So if there's low unemployment, high employment rate, fear of inflation coming in from the tariffs, this means that the Fed needs to pull the brake handle and stop the rate cuts. And actually, maybe in the future, even increase rates. And that is exactly what created the turmoil in the market in the last few days, running the 10-year to where it is today. Is it sustainable? No one really knows what drove the 10-year beyond everything I told you now, but what it did, it put all the investment banks and strategists to look at the numbers again, which they presented 2 weeks ago, and say, you know what? Maybe we had something wrong. Goldman Sachs now reduces from three rate cuts to 2 rate cuts, and taking March out of the equation. Bank of America, JP Morgan takes March out of the equation. Bank of America says no more rate hikes. Barclays removing March, RBC removing March. When everyone says that March is out of the table, but they only got one piece of data. They didn't get inflation. They don't know what tariffs are. Would you say that they jumped the gun a bit? I don't know. All I'm saying is the market was really fearful from it. You saw it in the 10-year. You saw it in the stock market. You don't need to fight it. Anyone's opinion is fine, but we need to take under consideration that they are worried. They're worried that inflation is coming back. They're worried that the rates will not keep coming down. What does it mean, and why did the Russell go down 3% because of that? Because higher rates impact real estate, impact regional banks. We know that. We've been through that cycle in 2022. And if that impacts those areas in the market, that is a problem. But, and there's a big but related to everything. And no, not the but that you're sitting on. There's a big but related to that. In 9 days, I'm recording this January 11th. In 9 days, there's going to be a new president in the White House. That president says that he won the election due to high inflation, which means that he would not like to see high inflation. If he would not like to see high inflation, and also he says that the rates are too high. If the rates are too high, he doesn't want to see high inflation, and he's going into the White House. Do we really think that he's going to provide more gasoline for these things to happen? I don't know. I'm just saying that the market is very, very fearful right now from the situation. Who else is fearful? My daughters. You know why? Because the Supreme Court signals that it's likely to uphold the TikTok ban. As of January 19th, if all goes as planned, no more TikTok in the US. Let that sink in. TikTok doesn't have a stock, of course. ByteDance is the parent company. Maybe someone will buy it. Maybe they'll find a midnight solution. Or maybe they'll just listen to President Trump that told them, wait with that a few weeks until I come into office and then we'll figure it out. Currently, as of the time of this recording, TikTok is going to be banned January 19th. What are you guys going to do? Are there any special books that you want to read? You want recommendations? I can give you a few recommendations. One, you can read this very thick book that is called Technical Analysis of Stock Trends. I really recommend it. You can learn technical analysis through that. I can give you a few more books if you want to read, but that was kind of a joke. Not a joke. It's a very good book. Jensen, NVIDIA, had an amazing presentation during CES, the Consumer Electronic Convention in Vegas. Jensen Huang, NVIDIA CEO, presented the future. He says, look, the next area is agent AI. After that, physical AI. Agent AI meaning that customer service will be run by AI agents. Everything would be run by them. We don't need to do that anymore. Next would be autonomous driving. Tesla being the leader. Physical AI is cars driving themselves. humanoid robots doing tasks in factories, in warehouses, maybe even in kitchens, cutting the salad for us. Why should we cut the salad and get cut in our hand, in our fingers instead of them? Sounds like an amazing future. And we believe that investors should look years ahead. But Wall Street right now looks from one quarter to the other. And the question that were asked is, when is this available? Jensen says in a few years. It's not yet. It's a process that needs to take time. And the stock goes down because money will not be generated this year. But the vision is clear. Agent AI is here. It aligns very well with CRM that says the same thing. Physical AI aligns with Tesla's vision and other companies' vision to enable more and more cars, autonomous driving, and humanoid robots to do exactly what we are supposed to do. This will be one step further to solving unemployment issues, to solving, and yeah, I know it sounds strange, to solving the lack of labor that is needed. And if there's a gap here that isn't clear, there is still lack of labor in the market. Birth rates are not going up, they're going down. In the future, we will have less workers that the market needs, which means that you need to find solutions. AI is a great solution for that. Physical AI is a great solution for that. And that's the reason why all these things are happening. Disney, Fox, and Warner Brothers are canceling their venue sports streaming. They were supposed to open up a streaming service for sports. They decided they're not going to do that. Square is changing their ticker from SQ to XYZ. HP Enterprise is signing a deal with XAI. I think it's about $1 billion or something like that to provide them platform for server optimization. Constellation Energy is acquiring Calpine for $16.4 billion with the rise of demand for electricity, especially for data centers that run AI. Constellation Energy, the ticker CEG, is trying to be ahead of the herd. We have, unfortunately, the wildfires in LA with $135 billion economic loss or impact from that. Very, very difficult time for whoever is living there. We will see if the insurance companies will be the ones that are hurt from that, or maybe the builders will be the ones that will gain from that. Currently, with the market going down across the board, you can't really see who are the winners and who are the losers. Unfortunately, this is the way the market thinks about these things in winners and losers terms. Tesla refreshed their Model Y. If you like the rear end, if you like the internals, if you like the wheel, if you like the speakers, a lot of new clips. Currently, it's only available in China. Probably in the next few weeks, it will be available also in Europe and in the US as well. Biden is gonna, in the last few days, probably gonna further curb NVIDIA and AMD from selling AI chips to China. Actually, it's not really clear for me what is more to further curb. Or they're selling, or they're not selling. How can you keep curbing something that you said that they're not allowed to sell? I have no idea. During CES, Amazon announced that they're planning to enter technology collaboration with Qualcomm, with BMW, entering their tech into BMW's cars. Meta, huge change of ending their fact-checking and moving to community notes, same as X or Twitter, and basically moving the fact-checkers from California to Texas. Mark Zuckerberg is aligning himself with Donald Trump's agenda, with Elon Musk's agenda. He's naming Dana White into his board of directors. Dana White, UFC CEO, very close to Trump. Very interesting moves from Mark Zuckerberg, who is betting on both Trump and Musk for the next 4 years. Very interesting moves from him. Uber is partnering with NVIDIA to advance autonomous driving technologies. And all this week, we got several, I would say tens, if not hundreds of companies that took their logo, took NVIDIA, and said that we're partnering with NVIDIA. And to tell you the truth, every company right now is partnering with NVIDIA because they're using their GPUs, they're using their networking, they're using a lot of things coming from NVIDIA. So if you see if you're investing in a company because they have signed a contract with NVIDIA, or they're aligning with NVIDIA on something, come on. Really, don't. You can do whatever you want, but don't. Deere, ticker DE, is introducing autonomous machines for orchards and a lot more. They're basically building a whole arsenal of tractors and other farm vehicles that will do everything autonomous. No, you don't need a farmer. You just need a farmer to operate everything, but not more. You don't need him or her to sit inside the cabin. AMD is going to be the processor in the new Dell Pro devices. That's another setback for Intel. And another good news for AMD. Although AMD stock is not appreciating any of the good news, a lot of bad news is incorporated right now in the stock. Maybe more bad news is coming. I don't know. Currently, the stock is hammered very strongly. And this week we had the first bird flu death in the US, and a 65-year-old that might have inhaled. There's a lot of behind the scene. He might have inhaled it from what he does for a living. I heard in several doctors saying that this is not as severe as COVID, but who knows? We need to be protected and know that it exists. Okay, those are the news for the week. When we look at next week, here we go again. Earnings season starts, and this week, in a very strange, I would put kind of a music sound bite underneath it that says that Wednesday we're going to start getting earnings from the banks. Usually it's Friday. Why is it Wednesday? Just aligning the dates. It doesn't mean anything. We're getting JP City, Wells, BlackRock, and BNY on Wednesday morning before the opening bell. We're getting Taiwan Semi, not really a bank, United Health Corp, Goldman Sachs, Bank of America, Morgan Stanley, US Bank Corp, and others Thursday before the bell. And on Friday, we're getting SLB, formerly known as Schlumberger, Regents, Truist, Wipro, State Street, Citizens, and others on Friday. Basically, earnings season, here we go. On Monday, we're getting a lot of volatility, but nothing special. On Tuesday, we are getting the PPI, the Producer Price Index. On Wednesday, we are getting the CPI, the Consumer Price Index. We're getting, of course, the earnings that we talked about. On Thursday, we are getting the December Retail Sales Report. And on Friday, we are getting nothing special. The CPI, that's Wednesday. If you want to see what the previous numbers were, you can see it here. It's not really relevant, but that brings us, of course, to the S&P 500. S&P 500 during the week, as you know, this is the SPX, of course, hit the 100-day moving average. Every week, the last, I don't know how long I'm making these weekly videos, I'm presenting in a very easy to understand way the moving averages. Moving averages is just a quick explanation. This is the 50-day, this is the green one, the yellow one is the 100-day, and this red one, reddish, is 150-day moving average. The way it calculates it, it takes the closing price per day according to the number of days, let's say the 100-day moving average, and it sums them up and divides by 100. That's the way it gets to the calculation. And as you can see, we have hit the 100-day moving average. In the last year, we have hit the 100-day moving average 3 times prior to this occasion. It happened on April 24, it happened on August 24, and it happened again on September 24. One out of these 3 occasions, we actually surpassed the 100-day moving average. That was August 5th, and we went up. So it's not a wall, it's not a floor, but it's something that the market usually picks up when it happens. Will it happen Monday or this week? I have no idea, but let's look at what happens or what happened in the past. We had this slip to 150-day moving average on August 5th. We remember that. And when we had the quick run-up back, then correction, then run-up, and we saw this running up. Will now be different. Will we hit the 50 or will we hit this 5,700? I don't know, but you need to be prepared for that. Getting us down to 5,700 will mean that we are going to see a correction of around 6.5% on the S&P. Currently, we are at a correction of around 4.5 or even close to 5%, 4.85. What we do know is that we still have an open gap from the day after election. You can see it here. Open gap means that the closing price of the day was lower than the opening price in the day before. That's a gap up. We're very close to closing it, which means that we basically went back to the day Trump got elected. This whole trip was a round trip, and everything went back to exactly where Trump was elected. We're very close to that. 80% of the gaps are filled, and I assume that this gap would be also filled. 57.83 is the bottom part of the gap. Did we close it during after hours? No, we still did not. We still have a few cents to go. Will we get there or not? I don't know. You need to be prepared to around 5,700, and if we go up, you should be prepared to 59.50 is the 50-day moving average, and the 6,000 because it's a rounded number. From next week, these weekly summaries will include, of course, the earnings and the news and everything that we had. Stay tuned. Subscribe to the channel. Like if you liked it. And, of course, share with your friends. Till next time, bye-bye.